Hello, everybody. Welcome to session 3 of Helping Chloe of our six-part mini-series where we're helping Chloe, one of our experienced members, or about a one-year long member and pro trader, going through your journal, going through your potentially later in the series, limiting beliefs, psychology, all the stuff that is important when learning to trade professionally. Chloe, you're on your way to becoming a full-time funded trader. You're making some good leaps and bounds, but there are some refinements along the way that we're identifying, isolating, and working on. You just mentioned there before we fired up the recording that you went through last week's recording, right? And you said it was quite valuable. What were the key takeaways that maybe you didn't pick up on the first time round that other people may have also missed who watched the recording?
So I think it was about the role that support and resistance plays. So I feel like I've been quite and like if it's crossing wicks, then it's resistance. If it's not, then it's not. And that's not really the case because you can get these it's more like the art side of it and viewing if one candle comes above, if there's this solid resistance and one candle comes above and then it goes down, the resistance level doesn't come here. You've already actually seen that it is there and it is strong. So not then discounting it and being like, well, the wicks didn't cross. Um, but like having those firm rules, but then being able to like look at it with a more creative view instead of a mechanical view in some instances. So I think that was the big bit for me.
Spot on. Excellent. I've always said, and what you mentioned there, what you mentioned was the art of it. And I've always said the trading is a perfect blend of art and science, right? Like if it were just mechanical, and when we first start trading, it is wise to stick with just the mechanical principles because you're not really understanding the why behind things happen. You understand the what. It's easy to understand the what. Okay, this is support, this is resistance, this is a break and retest, and so on. But why are we quantifying it as a support or resistance level? And then that was where the last session we kind of told the story, right? And of price driving the bears driving the price down and the bulls driving the price up and where profit taking's happening and all those different concepts. Those are not essential in your first few months, and you can be profitable by only trading mechanically, as my first trading mentor taught me as well. Like learn to trade 100% pure mechanically. And then after that, you can apply a dusting, a light feathering of discretion. Now, not discretion as in getting creative and getting fancy, as I say in trading. Don't get fancy. There's no need to get fancy when it comes to looking for trades, but you can start excluding more trades by painting the picture and to see what is happening next, the anticipation of what's happening. Like a great chess player, and I come back to this one quite often as well, or even a great cook, guys, I like talking about food a lot. You can't just like a great chess player is not just a mechanical robot, right? Because there's so many different variants of things that can happen. Now, apparently, there are supercomputers out there that can play chess very well, probably beat most grandmasters. But there's anticipating what is coming next based on what has happened, and that's not so simple or easy. As far as I'm aware, it's nobody that I'm aware of has ever cracked the code with like robotic, just pure mechanical trading. If trading were or could be just purely mechanical and do very, very well, then we'd have more trading bots and automated systems where you just push the button and it runs. So yeah, it is for novice traders, mechanical trading will get you. It's a very important part. That's where you need to spend most of your time. And Chloe, you've been spending a lot of time in that area as well. But the little refinements that we covered last week, all these little things and things that you've been discovering, is moving into kind of discretion by seeing the art and combining that with the science. The science is the mechanical side. The art is the human eye. It's seeing, okay, what the quality break and retest, the quality of their support and resistance, and the situation behind it. And that just comes with time and experience on the charts. And it's, I tell you what, it's a bloody hard job actually trying to take these concepts from being an experienced trader and putting them into words and explaining art. It's almost like trading is almost like being an art teacher, you know? Like, how do you teach painting? Like, teach conceptual painting rather than like, you know. But it's good. We'll be making good progress. Good share. Was there anything else that you wanted to add to that before I go and run with the microphone in true Luke fashion?
I think that's the big one that has um been on my mind. So
Hmm,
really, week one and week two both kind of were different looks at support and resistance. So I think that maybe is a place for me to, I don't
excellent.
know, improve.
Cool. Well, we covered five trades last time. Um, four out of five were valid. The first one was the second one. One of them was not valid completely, and the other one was only so valid. I think there was a management issue. Excuse me. So anyway, out of five, I'm been keeping a tally of what your performance would have been. So one of them was a trade that you shouldn't have taken that turned out to be a loss. I'm keeping a little for anybody who's wondering. This is the situation here. Let's go. You can see trade two, cross, trade five, had a cross, and then I'm going to keep a tally of what the performance would have been had you done your job perfectly. That's what I like to do with the one-on-ones, right? So had you stuck to the trading plan, which is not making silly mistakes or errors, what would your performance have been? And not it doesn't always mean, and this is for everybody on the call here, it doesn't always mean that your result would have been better that month or even that quarter, typically during that quarter. But we do this so that we see how we perform in relation to our trading plan, right? So the reason why we do this is two things with trading. There's trading plan creation, and then there's executing on the trading plan. Now, having a profitable trading plan, having one written down and understanding it, comprehending it, that's only half of the job. That might even be less. That might only be 30% of the job. And I could sit down and spend a, a month or a week. You know, if we did a full 1 week long intensive, many of you would get a good understanding of how to trade. Even if you'd never traded before, you spend a week together. And then if you were to go and start trading, even though you know how to trade, knowing how to trade and being a profitable trader are very different things. Being able to execute on that plan, that's the slippery gypsy that you're trying to always pursue, right? And we've got I call it closing the gap between your backtesting results or your trading plan's performance and your live performance. Closing the gap between your backtesting performance and your live performance. You mentioned, I think, on the first call, your backtesting performance is pretty good, right?
Yeah, it's all right. I feel like my backtesting seemed better, but I don't actually feel like I have that much confidence in my backtesting data just because of how I've done it. I've like did it in different blocks, and I feel like with Trend Chaser, I got to the point where I was like, right, I have a solid plan. Like I have tagged this all, I've analyzed this all, I have hundreds and hundreds of trades. With Pip Snatcher, I'm still working to get that volume.
No.
Um,
What we're going to do then, this is perfect uh, food for or fruit for our maybe fifth or sixth session together. So we've structured this in six parts. Of course, we're right in the middle of it. We're at session three. Today, guys, we're going to be going through dozens of trade examples, learn more, see if we can expand more upon the learnings that you had with the support resistance, see what other discoveries we can make. We're going to do that with you today, Chloe. And then in the later sessions, then we can deep dive into back testing and seeing what the moving forward would look like and how do we do this ourselves? How do we build really strong confidence in our backtesting data, and then how do we close the gap between our backtesting data and our live data? Those are the important things. Cool. Sound good?
yeah, sounds good.
Let's let's jump into where we left off. We went through five trades, your first five on your trading journal, if you could pick up where we left off last time. And today's
Sure.
just going to be very trade review heavy. We have the luxury of spending a whole hour of just reviewing trades. Typically, I don't have with regular one-on-ones. Normally talking about other stuff as well.
Can you see that?
I can see that. I believe we started
Okay.
from the bottom
Yeah,
on
I just want to double check I had the right account.
yeah,
Um, yeah, we started this way. 1, 2, 3, 4, 5. Yeah, so we ended on this one. So next we go here.
right. XAU USD. The fifth trade was this is the sixth one, is it?
Yeah, the last one was CAD Yan. 1, 2, 3, 4, 5. And then this was the one we spoke a lot about, the support, and this was the minus.
Oh yes,
So I
that was
think
the one that we. Oh yeah, and the minus 3.8. Yeah, oh, cool. I've got that one on here. Yep. So that was one that I said it was probably shouldn't have been taken. Yeah, which is the plus 3.8. I've actually marked that down. So as I said before, with the for anybody on this thing here, you can see the last one is a minus 0.38. So if you'd stuck to trading plan, or if you'd Chloe stuck to your trade the trading plan of high quality trades only, you would have actually not made that 0.38, which is not a bad thing. We're not here to make profit. We're here to trade our trading plan precisely. And another day is when we identify what is the most profitable trading plan. You've got two jobs as a trader. One's trading plan refinement and creation, development, and the other job is pretty easy. Being a trader, the actual trading side of it is just show up and do what your trading plan tells you to do. Two different things. It's like the employer and the employee. When you're in the employee seat, you're just doing what the boss tells you to do. The boss is the trading plan. Right. Right. Good. This is trade six, is it? Entered on
yes,
there. I
still
love the
there.
way that you've been logging these as well, by the way. I've had a few other one-on-ones recently, and like there's signposts there, guys. If anybody's not using signposts like this vertical line here and saying what the outcome of the trade was, putting things in, like this is such easy, clean data to read. So you'll for anybody watching this, you'll do yourself a favor by collecting clean data as Chloe has done. All right, good stuff. So this was a long position
Pip
on the
snatcher.
daily. I'll get you to. Oh, you do have it. Do you? I'm trying to see if you got the daily 20. You do. It's kind of like just
Yeah, it's faint.
very, very
I'm
faint. It's kind
using
of buzzing in and out.
Yeah, if it looks bad, I'm using a monitor, so I can always share my Mac screen and maybe it will look better
It's okay.
if it's too faint. Okay.
Nah, it looks fine. I can kind of see it. Just kind of just flickers a little bit. Right. So you hadn't reached the 20 EMA at this stage by the looks of it. So what I'm looking at first is your DDP here. So your daily direction prediction. You've seen its price is clearly in a downtrend here. It's broken below that 2050 EMA zone. At the bottom of its journey, at that absolute low, it had a big bullish engulfing, little sideways candle, little in like tiny doji red candle, and then another big bullish engulfing candle then. And then it's on its way up to the 2050 EMA zone. And then, yeah, that's a solid DDP. I'm happy with that. So we go here, right? So we've got the simultaneous break and retest of the 1 hour and 4 hour, is it? The 4 hour is the blue.
Blue. Yeah, 4 hour is blue.
1 hour
One
is the
hour is
green.
green.
Cool, looking good. Mm, can you see what would you guess if I had a concern with this trade? What would be that?
So I think I have a different concern, but this is where I need to learn and improve. So I think your concern would be that it's stuck below the daily pivot line
No, no
before I
problem with that.
entered.
You're still
Then
right on
is
that
it
zone. So I remember
okay?
actually in the past we had discussions on daily pivot lines, and you used to enter way below it. What I'm looking for is for what you're talking about is space. See how you haven't created any space between price and a daily pivot line, so it's still actively rejecting it there. That's no problem. It's down. Every single one of those
Okay.
candles kept coming back
Hmm.
and trading to it. So you wouldn't say, and an inverse to that question would be has this broken and retested to the downside? And if you understand what a break and retest is, which you're pretty confident with that, is you've got that space, you've got that arch. That in no way looks like a break and retest to the downside to me. So that's fine. Price ran down there. You got the trend line sloping up. Maybe we'll get you to zoom in to that a little bit, just so um, I think you can probably pinch here. So we can see what we're talking about is that there's a blue horizontal line there, the pivot line with the P on it. Price came down every single time. It just kept touching that level. It consolidated at that level, but it held that level. That's what it looked like to me. And it popped up. You took it as a live entry. Good. So that's not my concern. What do you think the other thing could be?
So my concern, and this is something that I have no idea where I sit on. I'm tagging and thinking about it a lot though. Is like this is like, is that a swing? So if that's a swing, then this is kind of a lower low, and then this is not quite a double top, but it's something. So this would be this is like a watch out for me.
Mhm.
And other than that, I don't know.
Good. Good. That what you just said there, I've not heard it called that, but maybe in your Scottish accent. This is a
What
watch
did I
out
call
for
it?
me. A watch
Oh
out.
yeah, yeah.
Good. This is a watch out. I agree, which is why I'm going to give it a tick because it's valid. This is all that we're doing on the marking on this side. There's valid and invalid, right? Every trade that we take is either valid or invalid. Valid means it meets all criteria. Invalid means it does not meet one or more criteria. So if this were a clean double top, that's a critical credit. That's invalid. Breaks the trade, right? If this had to form a lower low before the entry to present, well, then that's a kind of a partial trend change. That's invalid. Now we can see where, there's the big long low test big that we saw that one there. It didn't really break that low, right? And then looking horizontally to the left, we've also got the all the way to the left. There you go. You've got that high there, which is kind of creating the sort of support resistance level, which that is more concerning to me that that's where price was stuck under um, when you were just before you took the live entry. You see, so it did conveniently kind of layer on top of the pivot line. So it didn't break and retest that level, but it ran down, kind of got stuck in there between the trend line and that resistance level. And then you did enter on the breakout. But there was still a minor negative there. All of these things don't invalidate the trade, right? So this is if we wrote down the critical criteria, every one of them are met, which means it is valid, right? But there's a few watch outs in there, right? Now those watch outs are what take it from epic potentially down to solid, potentially down to subpar, right? So this is what we're talking about when it comes to discretion and mechanical. Mechanically, this checks all the boxes. So I'm going to give you ticks across the board for it because that's all that we're marking at this stage. So tick, 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 good. And it was a loss, no worries. If there's a brand new trader watching this, good, give them a pat on the back, good trade. Now, Chloe, because you're a little bit more advanced, I'd say if there are watch outs that are giving you giving your spidey senses a tingling because you are more advanced now. Don't rely on spidey senses if you're still in your first year for anybody else there. But you're at the point now that you've seen enough of these and you've got a few watch outs that that's a flashing red, a blinking red light suggesting maybe this is actually a subpar trade. On paper, yes, it's valid. If you're brand new, take every valid trade, you'll do just fine. If you're advanced and you're trying to refine your performance, you want to be moving into professional grade trading, going into prop firms. We're never taking trades that are not valid. So we're never getting fancy. Getting fancy is, oh, well, it's got this, that, and the other thing, but it doesn't meet critical criteria. It's still invalid. But being discretionary is I'm not going to take this truly valid trade for reasons that my spidey senses are tingling and it's quantifiable. There are too many watch outs here, right? It's kind of got this sort of lower low vibe. If it weren't for this really long low test candle, it would have had a lower low before the entry. Plus you got the resistance, it's just a bit subpar is what I'd say this one is. So ticks across the board, but things like this you got to be wary of. On our first session, I said because your hyper trades, you've got positive performance. Between your hyper trades and your pip snatches, positive performance. So the best way to, if you're taking a dozen trades a month, this goes for anybody, taking a dozen trades and you're at break even or you're at like a little bit of profit, which is kind of what you were at just between power trends and reversals. Oh no, sorry, I'm within hyper trades and pip snatches. The fastest way to improve your performance is to remove the losses from your trading journal. It's not to add more winners, it's to remove losses. So you'll notice that skilled traders or advanced traders, they get more conservative as they trade. Provided you're getting if you're taking obviously like two trades a month and you're making 2% a month, 100% strike rate, obviously you need more trades. But you're taking a sufficient amount of trades. We just want to remove ones that are just not, really lighting your boots on fire. I just made that up. That's not a real saying. So yeah, that's one that I'd mark as subpar for that reason. It's just not quite good enough. Now, your yardstick that we mentioned on the first session was if it's not good enough to be like your version of a hyper trade, then maybe it's not a pip snatcher at all. Remember, because your hyper trades are really good, that the quality of the entry criteria and of the actual, because a hyper trade is a pip snatcher with just with more advanced management, right? but that could be a little barometer for yourself to minimize subpar trades. Cool, good one though.
Yeah.
Good one. No, six. Anybody else who's on the call, feel free to tap in the chat there if you've got any questions about any of the trades that we're going through. Right, trigger. So there's a long position right following that. Yep. Look, trend's intact here. That resistance line. Now we haven't got enough data to go back and quantify that. If that was a hefty resistance line, could be something worth paying attention to, but we don't have really the data for that, or unless you do.
No, I don't. This was a trade that was,
Carried through
oh,
news.
I don't know if, yeah, it was USD news, but it was CAD, but I think it was maybe retail sales I have in my head. Um,
Mhm.
but it did actually have a big impact, and I've adjusted my rules now to not have CAD entry orders open over that news because it just went through.
Mhm. Yeah. Entry orders. So carrying entry orders through pretty much any news. You guys know that I'm a little bit more gung ho when it comes to trading through news in certain events like retail sales. I'm not too worried, but I'll look at my trades case by case to see, well, if I'm really close to stop loss, I don't want to get taken out by spreads, so maybe I'll just close it for 0.8 loss. Likewise, if I'm very close to profit, if I'm 80% of the way to my profit target, I don't want random news to just whip it all the way back down to a full 1% loss. So I'll just close it then and there. But it was floating somewhere around. I'm already live in the trade. It's flapping around sideways somewhere around break even. I'll stick with it. I'll keep it open. But my hard rule is I won't be carrying entry orders through major news. That's just crazy stuff because especially the way that we trade as day traders, we use limit orders. So it's gonna news will either do nothing and not trigger our entry, and it'll just stay where it is. And okay, well, that's not beneficial. Or it will rocket off in one direction. We don't know which direction. It could rocket off and hit our profit target, but it never triggered us in. Otherwise, it's not an entry order in a live trade at that position. Or it'll rocket off the other direction towards our stop loss, trigger us in, hit our stop loss, all in the space of sometimes you managed to last 6 minutes in this one. Sometimes I've seen them and I've made this error. I've lasted it was like 1 millisecond, quite literally 1 millisecond. It's like the fastest way to blow $3,000. Made that mistake. Who's lost 3 grand in 1 millisecond? That's you worked that out at an hour lead loss per hour. That would be a lot. Don't lose that. So entry orders carried is kind of a big no-no there. Um, Entry order would have invalidated the trade, of course. Or if you had paused the entry order, the trade would have become invalid and you wouldn't have taken that one. So I'm going to mark a cross on that one, and that is a 1.00 that we would have saved. If you'd taken that entry, if that had triggered an entry, 2 hours earlier, 3 hours earlier, and you'd stayed in it, totally not a problem. I would have said, fair play, I'd let you keep that one on the books. If you could go down to the entry order, if you've got the pre-trade set up, because I'd like to see the position a little bit closer. It looks like that was quite a
When I don't have before and after
you don't have
screenshots.
before after. Okay, so if we just zoom in here,
No.
that's pretty low where you're at. That's my one concern here. Where your entry, I see that you managed to wiggle that down enough. So I'm looking at where you kind of your stop, your entry price and your stop placement is. You wiggle that down quite a lot so that your stop is behind S1. Good. The entry being where it is that's really low because the risk that we run is again trading back up into the pivot line can create resistance, which is exactly what we saw here. Um, you know, and it had already rejected it once, and then it pulled back, and then it would have triggered your entry in again. Um, or the benefit of this is obviously you could have had a much shorter profit target. Um, but I would have put the profit target as not traded. It's well within those recent highs there, which is really nice. And I can see maybe you're targeting the wick of that sort of that lower low, or the lower high. Is that kind of what the logic was there if you go to the left?
No, so my logic is my rules are this is 30%, although I just worked out it's
Mhm.
33%. Um,
Yeah.
but if the 1 hour 50 EMA is within 30%,
Mhm.
then I expect it to be rejected. So I put my entry order in front of it.
Mhm.
That is how I'm back testing. But then I'm also back testing all the trades that I missed because of this rule to see
Mm.
if I should change it and put it on the daily pivot line. So that's just the rule I have now. So because it was within this 30%, my entry order goes in front of the 1 hour 50.
The risk with that is the reason that I mentioned that you're trading back into the pivot line and that it's creating resistance. Like if you look at the distance as a percentage from where your entry, where your open price is to where your profit target is, the pivot line's pretty much bang smack 30, 35% of the way to your profit target. If you move your cursor to where I'm talking about for those participants. Yeah. So from entry price to profit target, that's about 35%. That's a third of the way to its journey. You're only just starting to build up momentum on that position that now you're trading smack into that pivot line, which is going to create headwind, which is exactly what we saw here. Now it's very hard to determine where price was going to go after this if news weren't a thing. But we can see following those two green bullish candles, we had like it popped up, it went back down. I guarantee if you went down to the 5 minute or the 2 minute time frame, you'll see that there's resistance. Its price is failing to break that pivot line. Right. And we see this all the time on the trend chaser. The trend chaser strategy is literally on the 10 minute and 2 minute time frame. We're using that as a little springboard, something to trade off of. So yeah, we got to be really wary of that. And there was a piece of logic that you mentioned there, which with the you expect price to come back and reject the 1 hour 50 EMA if it is within that 30% zone of the pivot line. Not always, quite often not. On often really, really good setups, when price is absolutely hauling ass and it's trending up very aggressively, you find quite frequently price doesn't actually ever pull back to the 1 hour 50. It'll pull back to the pivot line. Like it does need to pull back to at least one of them. This is where you've got a choice. Like if the 50 EMA was like a smidge above the pivot line, you could actually just put your entry order on the 1 hour 50 EMA rather than below the or right on the pivot line. You've got a little bit of a zone there, but I'd say like I've never taken a position. I've never even back tested a position. So I'm just using trading logic here. If you've extensively back tested this and this is, the Chloe Andrews method, then we can incorporate that into, Andreas has got his own method. If you've got evidence to say that this is actually a better method, um, go for it. But at this stage, all right, I would suspect that there's a trade-off that you're making here that is a negative trade-off. The first is you're going to be missing the great setups by having your entry order so low because the great ones might just find a foothold at the pivot line and away we go. We've got so many other supporting confluence factors and it'll just touch the pivot line and fire off and away you go. And that's really great. Those are the positions obviously that we want to catch. There's a likelihood that those are the positions you'll end up missing because your entry order is
Yeah.
too low. So you're missing the cream de la creme of the positions. And then the other one is that now not only are we missing the great ones, but potentially, I'm thinking 10,000 samples kind of thing. But if this pulls back and then hits the pivot or the 1 hour 50 EMA, that again, now you've got every single one of your positions that you set up like this, they all have this added headwind of having to trade through the pivot line as well. So we're missing great ones, and the only ones that we're catching all have I still call it a minor negative. It's not major because the 50 EMA is really the more robust of the criteria here, but it is still they've all got this negative in common.
Yeah. So I had I had 1 month where it was like, oh, thank God I'm doing this method because this is working so well for me. And then I had 1 month where it seemed like I missed loads of great trades because of this method.
Mhm.
And now I have my back testing plan, which I think is going to take me, if I'm really active, 2 months, 2.5 months maybe, to like complete. Um, so now I'm like, right, do I change my trading plan without the data because of what happened last month?
Mhm.
And I guess because of what you say, so that's an extra thing to suggest I should change it without the data because I've still got to trade for that 2.5 months until I have that back testing project done. So do I change it on information or do I wait till I have the data? That's where I'm at.
Hmm. That's a good question. Do what works best majority of the time, every time. To know, and so this is always the equation I do in my mind, right? Do what works best majority of the time, every time. Now, to do what works best majority of the time, we need to know what works best majority of the time. And without the backtesting data of your project of the Chloe Andrews method, then um, we can't be we don't have any confidence apart from some some live tested data that you've got 2 months worth, which is insufficient. Of this exact method, you probably took, I'm assuming, like 8 to 10 trades each month, so maybe we've got 20, maybe 30 even samples of this, which just isn't sufficient. So logically speaking, trading an untested variable, which is largely untested, is almost always a recipe for disaster. It's just never the best approach. It bloody well might be, and I hope it is. If you come up with a new method and you're like, "This is way better," I'm gonna refilm your ultimate curriculum and I'm gonna pay tribute to you, and I'm gonna tell everybody this is the way to do it, right? It might be like this is why I have Pro Trader. This is why we have this community, is that we can have people like yourself go and actually test and tweak and refine. And this is effectively what I've done with the first strategies that I learned. The power moves was the ancient version of the pip snatcher, right? And I've tweaked and refined that, incorporated the 4 hour time frame, a few things. But this might be the next generation. So, it certainly could be. But until that happens, until we've got data to back that, I think do what works best majority of the time. What do we know works best majority of the time? Not what do we guess, what do we know? And that's the method that I trade. Not because my way's the best, but it's the best way that I've found up until this point. So yeah, I'd say the only time that I really get aggressive, and I'd never take an entry this far below the pivot line. So there is some wiggle room where you can move it, shimmy it down a little bit, but the intent behind that is really so that you don't need to trade beyond the recent high. So you've got a ton of room up there to the recent high. Um, Sometimes what I do, I'd put my stop loss where your stop loss is, perfectly positioned, put the profit target at the top of the bodies of the recent high. So not all the way at the wick, but just at the bodies. Yeah, I put my profit target there, and then I'd wiggle my entry order so that the profit target and the stop loss equal exactly one to one, and that would probably be about halfway up to the pivot line from where your entry was up to there. Yeah, exactly right. That's where it would be. Now, let's just say one last little scenario. What I would have seen likely happen in this position had we not had news, obviously, but then even that red candle, if we didn't have resistance to the pivot line, if the setup were there's two places I see where the setup wanted to move in favor, where like the turning point wanted to happen. Right, the first one was right as that we saw the tiny, tiny, tiny little bullish low test right on the pivot line. Yeah, that's where the bulls were thinking, okay, I think maybe we'll pop from here. I'm going to say half the setups that we get, or let's say a third of the setups, a large portion of them do exactly that. They pull back to the pivot line, they bounce away from there. Now, granted, at that point in time, your 50 EMA wasn't within the zone, so it wouldn't have made sense. We wouldn't have taken that. And that's probably the same logic that most traders that saw this had. And that's why we didn't get much gusto off the pivot line. We certainly found some support there, which quantified and showed this is going to create some kind of tailwind, headwind, whichever direction we're trading in. So it didn't happen there. Then it fell down for those 4 candles. And then we started getting, okay, now we've got some interesting accumulation here. Now we're actually going to start trading from there. If it weren't for the pivot line and probably news, that is where the bullish move would have happened. That would have carried it on, sailed it up to the profit target, and you would have missed that opportunity because of where the profit or entry order was placed. Like if it were to turn, that's where it would have happened in this exact scenario. So that's kind of a lose-lose. If you placed it on the pivot line, great, you would have caught it. If you placed it on the halfway point, which is probably where mine would have ended up, somewhere around there. Yeah, exactly. Then you would have caught it. And from that point, is it going to be a win? Is it going to be a loss? That actually doesn't really matter, because it would be a win or a loss no matter where you exited. It would be a loss if it was going to result in a loss because we're using limit orders. No matter where your entry is, you're going to be capturing every single one of the losses, right? Because it needs to pull past the entry price to reach your stop loss. That's what a limit order is. So you'd be vacuuming up 100% of the losses no matter where you place your entry. So the point of the entry is that we're not missing out on the winners. Where the way that we're trading here, it feels like we'd be missing out on the winners, a few of them.
Yeah, fair. Okay, I'll change that in my plan until all my data is gathered.
Very good. Okay. Did I give that justice, that explanation? I know I explained
Yeah,
this. Yeah,
it made
cool.
a lot of sense. I think the thing that stuck with me the most was like I'm missing out. I'm getting 100% of the losers. Like that makes complete sense, but
Hmm.
I'm missing the winners. And like I have
Yeah.
seen that, but then it's hard to like. It's like you get loads of information in like each day as you miss a trade or you lose a trade or you take a wrong trade, and then not like making that change you because then you could just be chasing your tail all the time. So trying to like ignore those things, but then actually pay attention to the important ones
Hmm.
is difficult to identify what are the important ones and what are the ones to ignore.
Hmm. Hmm. Hmm.
But okay, I'll take this as an important one and change it until I've got all my data, and then we'll know if it's a valid method or not.
Good one. Good one. And I mean, this one is a great obvious example. You can move on to the next trade, but it's just because you had so much room up to that recent high. Like if it was, you can play around a little bit if the high is nearby and you're wanting to not trade beyond that. Yeah, cool. Good stuff. Uh, trade 8, isn't it? There we go. This is a long position. Cool. Yep. He's okay. We've cleared the 2050 EMA zone. Higher low. I'd see that as a higher low, higher high. Momentum to the upside. Yeah, that's good. Solid. I'd call that a solid. Not crazy epic. The trend was a little bit funny, but it was solid. Right. Retest. Pull high. Pull back. Hmm. Again, I'll be questioning. Now, I noticed that you just kind of draw in resistance levels quite commonly. This would be that milkman. Has he made his delivery already? He's back around. He's coming around every week, this guy, isn't he? For where
It's,
your resistance line is R1, so actually higher than
yeah.
that. Yeah.
Mhm.
That one I'd be asking him, maybe you don't have the data for that. Do you know or remember how much resistance there was? If there was like 3 or 4 historical highs that have been rejected there. Uh, there was a
It
little bit
was
I see
there.
on the
So
daily there, a
yeah,
little tickle, yeah.
I
Uh,
think maybe a little, but it wasn't like the strongest one.
right. So it's pretty minor, right?
Yeah.
So that's that entering post, what I was just alluding to there, which it seems like we don't have sufficient data to qualify to say if it was a strong resistance level. But even though that you're not trading through that resistance level, again, that's the entering post rejection. If that had 3, 4, 5 rejections every time, like what we covered last week, out of the last 6 out of 8 times price hit this level, it bounced away from it. Even though we're not trading through it, there's so much selling pressure away from there. Just as a recap of last week, having the bulls running up, profit taking at that level, bears selling off of that level and accumulating because it is such a strong, valid level. You get a much stronger sell off. So we never want to be trading back into that level. Milkman's already made his delivery. He's going to come back around. He's not going to come back around for at least some more time. So he's going to carry on down, visit his neighbor down at the support level in the other suburb, and then he'll go back up there. But that's okay. We haven't got data to support that was a really strong resistance level, but certainly something that you're drawn in there. So it's good that you're aware of it. Nice price pulling back, deceleration there, pivot line there. Trading up, I see that you're targeting pretty much the previous highs, more or less.
Yeah.
Um, if you want to move your cursor over to like the previous high of this one,
Oh yeah.
there you go. It's around about there, so that's good as well. And where your entry is, like I'm really happy with that entry. Like that there, you wiggled it down a little bit on the pivot line. I mean that was still on the 1 hour 50 EMA, so that might have been what incentivized you to go to where it was.
Yeah,
But I'd say
that's my standard
right,
though.
so that's just the Chloe method. It's just like bang one on the one, right on the 1 hour. I would have had my entry in the exact same place, profit target pretty much in the same place. I may have even gone a smidge, like half a pip lower on the entry, because that would have bought us 1 extra pip lower with our profit target, which means that profit target would have actually lined up with the wicks of the previous high. There you go. Yeah, exactly. Because that can create resistance on the way up as well, trading beyond that high. Even though it's not beyond the recent high, it's just like other highs can create a lesser degree of resistance as well. So if this wanted to form a head and shoulders pattern, see where your cursor is the left shoulder. That's the head there. Yep. So left shoulder, boom, yeah, and then go up to the head there. And then if we placed it, got the entry, pulled up, formed a right shoulder there, and then broke away, that right shoulder, there's no guarantee that it's going to be exactly the same or even that one extra pip higher than the left shoulder, which is what would have been necessary to take profit on there. Everything here I can see is valid. So valid across the board, really good, unlike the last one. But it's just, yeah, that just a tiny little bit of a massage there. Actually, what was the last thing? Why did you exit on that one?
Friday, Devil's Hour.
Cool. If we jump into you going back to it, yeah.
Oh no, do you want to go back to it?
I'll just have a little glance here because I haven't been really looking at management so much. Let's just see if there's anything there. Um,
I'm pretty good. If we come across any, I'd be surprised. Like never closing a trade unless it's Devil's Hour or news.
yeah, I see. Oh, and it was Aussie Kiwi. Yeah, good choice. You're at break even. Just kill it and review the next day. Yeah. No, good. If that was something like a like a dollar CAD or something, I would have maybe considered holding it. Just because spreads, but Aussie Kiwi trading an exotic like that, it's not worth the risk of getting taken out by a spread spike Monday morning. Yeah, cool. Moving on. Long position, right? That's
Yeah.
quite deep now. That there, I already don't like that as a DDP. That's like, yeah, that's what's my popular saying? I've been saying a little long in the tooth. I don't know why I've said that, but I've said that about 5 times this past week. So no, that's pretty deep now. Now we've had so the DDP, you made that call on that green candle, right? If your entry was on the red.
Hmm.
Um, you identified resistance levels here, particularly yeah, that one, but particularly to the left. There's that zone of kind of junk going on there. We already did see one sort of minor deceleration candle the day before, a little green one there, yeah. We're very deep within that 2050 EMA zone. So I'd consider this a subpar DDP. I'd say it's still got merit. It's not like you're trading against it's not a down DDP, but it's kind of an unclear. And this is where you can, if you have epic. So I don't know what your lower time frame looks like yet. We'll have a look at that. For this to be valid, I'm going to give you a cross unless the 1 hour time frame and 4 hour are glowing, because this is subpar, valid but subpar for the reasons that you got that deceleration. You're so deep within 2050 EMA, you're basically very close to that 50 EMA, and there's a resistance level slash zone that you've identified. So let's go down. Let's see if this one is a tick or a cross. Yep, nice. So you got the trend line there. There was a support level that you'd drawn in as well. But yeah, that milkman, he's making plenty of deliveries, isn't he, this guy? It was that resistance level. And I'm sure if you had gone and explored that, how we saw on the daily time frame that there was some, some junk or something going on around there, some response to that historical data. Um, Further back, what was it, 6 months ago, or 3 months ago, whatever. If you had scrolled back on the 1 hour time frame, so this is a good tip actually. If there's consolidation historically, like on the daily time frame, you're like, oh, there's some consolidation sort of around where my level is. Like the daily time frame is where we can see big picture, where is a resistance level? Bang, put the resistance level there. Then you can refine the resistance level by going onto the 1 hour and going back to that same period of historical data 6 months ago. Um, and then you can see, okay, where is it? And you might notice that it's actually slightly higher or slightly lower of where you are. And that's going to be a more refined level. I'm not sure if you did that here, if you just put that because that's where the that high was. But I
Yeah, just because it works with the
suspect,
high.
yeah, I suspect if you went all the way back and you looked at where those daily rejections were on the 1 hour time frame, you'd see there's probably like 6, 8 kind of touches. And if it's exactly at that level, that would be that rule that we mentioned before about just do not take it for that yeah, for the reason that trading post rejection. But again, we don't have that to be able to see that. Entry, so your entry placement is very good here. Not trading beyond recent highs, really good. Stop placement's good. I think it was a bit late here, so it was 8 a.m. that you probably placed your entry order. Did you place this pretty much straight away? Did you? Because I guess. Didn't
Yeah.
trigger 2 hours earlier when it was on the pivot line or around about. Yeah, and that's in the mid, so that's coming into London Open. Yeah, like I like that one. I like that. I like that you've got the trend line drawn in there. He's solid 50 May, everything lined up. Good setup. Ticks across the board. Um, the daily is just again that was the one little minor, and especially considering the fact that we had so much of that pullback was so deep. Um, yeah, I would have certainly been looking at the oh yeah, actually, oh, bring up that
Oh,
chart
the
again.
four
I didn't think we
hour.
are going to. Okay, so where your resistance level was drawn, yeah, so we've got the 4 hour kind of resistance there as well. One other thing, could you go into the daily and see where the fib retracement would have been on? I mean, you can't really draw it, but I'm just thinking if I'd drawn from that high to that low, bit tricky because that wick was some big crazy news event. But that's pretty around the pullback is pullback a good in my as 382. So you'd if you had drawn in a fib retracement level there, even from body to body, from like the high to the low, that's probably about 0.382 as well. So that's showing that that implies that the downtrend has pulled back sufficiently for it to start continuing to the downside as well. Um, so valid, but I'd say still falling into probably the subpar. I would have really liked to see that 1 hour resistance. That would have ruled it out fully for me. But I'm going to give you ticks across the board because it is a valid setup. Um, but one of those little refinements. Uh, and again, if anybody's newer here watching this, I'd say the analysis that I'm putting into this is more advanced because Chloe is more advanced, right? We're going deeper onto the epic solid subpar scale. This is the amount of discretion that we're putting into this. And we're looking, notice how we're looking for reasons to not take the trade, you know. And I mean, I mentioned in passing, okay, the trend line, okay, so there was a trend line there that slightly offset the negatives. But the first thing that we do is the trade valid? Yes. Okay, check, 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 criteria met. What are the negatives? Right. We don't really care that much about the positives at this point. What are the negatives? And is this trade subpar? So is it valid first? Yes or no? If it's invalid, move on. If it's valid, okay. Is it valid but subpar? Because that also we want to remove it, right? And what determines the subpar is the negative confluence factors. And if it's in this middle ground space where it's got some negatives, some positives, then what we're doing is we're reconciling those, and we want the positives. If it has negatives, we want the positives to significantly outweigh the negatives to bring it from subpar to at least solid at a bare minimum, and ideally negative. But if it's got no, ideally epic. But if it has negatives, it's never going to be epic. The best it can ever be is subpar is solid. Sorry, making sense. Anyway, moving on. DDP down, good. I like that. Good. So we're not trading beyond that recent low. Big momentum to the downside. Big pull. Bam, bam. Here we go. Well, that's a good DDP.
Oh, this was the
Oh, Andrew's method.
is
Hmm.
yeah, exactly. Is Rich on the call? No.
Perhaps. No.
Okay. So this was the news event, which I still don't fully understand, but there was a strange maybe FOMC on a day that it wasn't supposed to be, and
Hmm.
no one knew, and a load of us got taken out of trades by a sudden movement.
Right. Great trade. And again, if there's news, so for anybody that can't see this, this one was a full loss because if you want to zoom in a little bit, um, just for the sake of the monitor resolutions and such, you can just a
Sorry,
little
there you go.
pinch. We can see entry there, entered in the Chloe Andrews style, and then pulled up, chopped along, and then wicked you out. I can see the appeal of the of your method because you can see you almost got out because your profit target is so short. And this may be, you may have had a few instances like this that have been kind of seared into your memory to be like, oh, if I'd actually gone, the dangerous thing to do here is if I just tighten my stop loss a little bit more, or if my entry order was just like a little, just a hair higher, I would have got out on that candle before the crazy news happened, and you would have look at how down close it got to your profit target. Like that was a yeah, that was a near one.
The other appeal is with hyper trades. It's like if I get in like this much shorter, then is it not like this much more profit I would get getting to the same, like on a 4-to-1 position? And the bigger the position, if I get in deeper, the bigger the position,
Hmm.
I can get to much higher numbers quicker. But I'm changing my method. But those are my appeals and why I think I'm drawn to this. Like I want to get in at the best price.
Yeah. And get in so that you can get out sooner. Is the only motive that I can see for this method. Like it's you're not really actually playing defensively here, because many of the you'll take 100% of the losses, but you're going to lose maybe 20% of the winners, as we mentioned before. But it's like we all have discomfort in trading. Trading is a pretty darn uncomfortable thing to do. Like it sucks. Welcome to trading. I'd never say that on my ads, marketing to new members, right? I say it's great. You're all here now. You're here, and it sucks. There's times you got to embrace the suck, though. That's what I say. Embrace the suck. Um, that there's discomfort carrying an open trade. Most of the reason why the Alkas of the group, hi Alka, like to close out early, it's because there is inherent discomfort in being in a position because there's uncertainty, and uncertainty in itself comes with discomfort. The most and this gets exponentially greater when you're in a prop firm challenge. When you're in the very first trade, I want you guys to all experience this. The first live trade that you place on a live 200K or 100K prop firm account when you've only been trading demo or $1,000 account. Live 100K, boom, you're doing exactly the same things that you do every single time that you've done 100 times before, 1,000 times before. Exactly what you did even trading the demo 200K account. Then you're there and you're seeing the $1,000 up, $1,000 down. It does things to your neural chemistry. Like there's stuff going on. And it's not even like the fear and greed. It's not like quite like gambling where you're like, oh, we're up, oh, we're down. It's like, I just want it to be over. I just wanted to hit my profit target, hit my stop loss because the uncertainty is just what it gets to you. Not saying this is exactly what I see here with yourself, but tighter pips, shorter profit targets, all this thing. It's like, okay, if I can get in and out really quick, then I don't have to be worrying about carrying this thing. Could be something worth considering or exploring.
Yeah, like definitely that's also part of my motivation.
Yeah. Okay. Cool. Oh, yeah. Good one. There are other mechanisms that we can use and this is for everybody, and this is why I really encourage Pip Snatcher, Trend Chaser are my two highly recommended strategies because it requires no trade management. So when you're in the position, you have full permission to just come back tomorrow or the next day. Just don't open the chart again. Um, because you've got the grace, you've got the luxury to be able to do that, so that that discomfort is minimized. Um, so in this case here, news aside, like even your method with tightening it up as much as you could, it didn't save you. And this is a very rare instance where it got very close to saving you. But let's say this is going to be the 1 in 100 times. It's the benefit that was garnered trading this style still didn't even save you here. Not slagging off the style, but it's just this is kind of we're weighing up the pros and cons. There's always a trade-off, right? So if you took the entry right on the pivot line, as you would have normally, you would have minimized the risk of missing out on a high quality trade, which this one is. I'm happy with this regardless, even though we had this weird, crazy wick. Stop placement's the same. Outcome would have been the same. Profit target would have been a little bit lower, so you'd have had to carry a little bit longer. And had we not had the crazy wick, both your method and the traditional method, they both would have been profitable positions. They both would have been profitable setups, right? But with the traditional method, that chance of missing the entry was diminished, right? So the only your method here is like almost a live entry, but placed as an entry order, which is now you've got the worst of both worlds. So the live entry is a great option. If you that's when it pulls up, you wait for it to hit the 1 hour 50 MA, and then you enter on when it's on its way down. So that would have happened on that first big bearish kind of engulfing candle. If you move your cursor to that one, to the right. So later, you would have entered 4 hours or five
Yeah.
hours later. That's where the live entry would have taken place, and you probably still would have entered about on the pivot line. And there's benefits to that because you're entering post 50 EMA rejection. Now, for having traded the live entry for multiple years, and I mostly swing more towards entry orders now, is that the problem with the live entry, if you're sitting here making the decision where your entry triggered, or just the hour before that entry triggered, if you thought, you know what, I'm going to wait for that 50 EMA rejection, because I get the logic of that. I want to hit this 50 EMA, boom, and then get in once it starts moving in favor. Many times, trading live entries, I wait for that 50 EMA rejection before I'm going to then look for the break to get in. Never pulls back to the 50 MA, run straight onto profit target. I'm like, shit, if I took it as an entry order on the pivot line, I would have been had a winner. So even though we're totally different entry method styles, just based on that, okay, entering post 50 EMA rejection, which that's what they both have in common, uh, I've been the victim of missing out on many great trades that were, and it's always the high quality of the ones that just pulling back deceleration, like a crippled old man trying to walk up a steep hill, and then like just a stiff gust of wind knocks him over. Call this the pivot line. Stiff breeze comes by, and he fucking tumbles to profit target. It's quite a brutal image in mind, right? It doesn't sound very good. I hope that I that was twisted because I don't want the old guy to tumble to his death, but I also want to hit profit targets. So anyway, yeah, that's the thing. We've hammered that pretty heavily. That was a good trade, good setup. I'd say I'm going to give you ticks across the board, but again, that entry method is still something that needs to be tested and quantified. I'd say just none, but that was just an unlucky one. Okay, where are we at? Hmm, right. Okay. Bullish. Yeah. Cool. We've got a couple of touches on that resistance line there, or resistance zone. Yeah, we had that kind of recent high that you'd drawn in that
Yeah.
one further back. Yeah. And then we also had there's more that are less obvious to potentially some of our viewers. Yep, right there on the way up, even though it broke, we see that one and these ones here. That's a great place to go and jump down to the 1 hour time frame to go back and no, don't do that just yet.
Oh,
But
sorry.
when you're setting up the trade to go and explore these places where there's consolidation around a level, you'd go onto the 1 hour and you bang on your resistance level to be like, is this recent high where is that a resistance level? Because if it is, again, the milkman's already made the delivery. We don't want to be trading into an already rejected resistance level. We don't want to be trading post rejection in that direction. Oh, there's a little rhyme there for us. Maybe make a song about it out of trading. So you go further back and you'd have a look at that. You'd expand that in the 1 hour and you'd see, okay, how much of this consolidation around there is where the resistance is right on this resistance level. How many of them were rejections? And you might find that sometimes where that recent high was on the 1 hour just before you take your entry, are we entering post rejection or is it on a way to a rejection or to a resistance level? And you might find that having a look in that consolidation period, would you mind making that more clear? Alka, we don't have the hourly data from the 20th of June. Um, yeah, we can zoom in, but the only way to see that data is to go and actually expand upon that further by going back on your chart, on the live chart, and then using that to quantify if that is a resistance level. Because right now we can see, okay, there is a rejection where your cursor is now. There's one there. Moving down on the way down, when it broke it on the way down, so just move to the left there, you can see there's sort of like that low test candle and kind of like a little high test. It's kind of like price was like it responded to it, but we don't know how clear the rejections are there, right? And then you go over to the left again, and there was that consolidation around that level. Where exactly is it? You could have maybe shimmied that resistance level up, 5 pips or 10 pips might not seem like a big deal, and it's not really on the daily. But when we're using this method of we're not trading in the direction post rejection of one of these levels, then that's where. And then further to the left, that previous high, that's obviously no longer relevant or valid for a 1 hour resistance level because that's the upper line. It didn't actually reach that. So yeah, if you had the chance, and this is just a little thing that you can use, okay, we've got sneaky suspicion that there is a resistance line somewhere there. Cool. It's not a big deal. on the daily time frame because it's not a major level. It's not like is falling away from it. But then on the 1 hour, quantify that. Is it a solid 1 hour resistance level that has just been rejected, or is it on its way to getting rejected? Jump down to the 1 hour time frame. See, so where you've drawn that resistance level post rejection, um, yeah, exactly there. Again, it's hard to know, was that the level or was price on its way up to another level? Let's say R1 here, go for example. If you zoom in a bit more, we didn't get this information off of the daily just by looking at the daily as big as we did. Let's just say that we had gone all the way back on the hourly time frame to where we saw those daily time frame rejections, and we found that actually where R1 is on that day, yep, that is actually where we saw majority of rejections or price responding to the real 1 hour level there. Fantastic. That's great news because then that means that price is on its way. It's run up, it's pulled back, and it's on its way to that level. These levels are magnetized until they're rejected. Then when they're rejected, they become repellents. Right? It's a good way to kind of think about it. Um, yeah, but again, we don't quite have that data at this stage. So at this stage, I don't see any major resistance levels. The daily direction prediction was fine; it was sufficient. Price ran pulled back. We did a Chloe method here. This one here, I'm going to mark
This
as
was a live
actually.
entry.
Oh, it was a live entry, was it? Okay.
Yeah.
Cool. This one here would be across for me because of how much space there was. See how this was looking like it wanted to create
Yeah.
a break and retest to the downside. So we want a
Yeah.
simultaneous rejection of the pivot line and 1 hour 50 MA. Now the pivot line you can enter a bit low if like price pulls back consolidating around the pivot line because the pivot line hasn't been broken. So if we were to ask our question, I like to ask like negatives sometimes, is like if the pivot line is clearly broken, then that means that that's one of our what was once support becomes resistance, which that was support. You can see those two little green candles on the way down. Before it broke, they were like, oh yeah, we're finding some kind of foothold here. Wasn't strong enough, it was pretty weak. All it was is just the pivot line. There's no support level, there's no 50 EMA, there's no nothing. So price headed down to the 50 EMA, rejected that. And now at this point where you made that call and you entered on the live entry, great, good choice on the live entry. But we're in this position that it's more than likely we're going to get stuck in this kind of war being waged between, and we see price oscillate between the 50 EMA and the pivot line. That didn't happen here. Right, so just to be aware, this was a winning position. It went on hit profit target, but still, there's too much risk because of how much space. Like there's 1, 2, 3, 4, 5. We were 6 hours below that pivot line, a ton of space. There's 5 hours or 5 hours where price didn't even touch the pivot line. Again, price been consolidating right on the pivot line. It's fine. It's still debatable. Has it broken? Has it not? Probably hasn't. It's just deciding where it's going to go from here. But the fact that it had fallen all the way down and we can kind of see if we're going to talk about like the war being waged. There wasn't a huge war that was waged, but as it went, the two candles to the right of your entry, you see, I would put money on the fact I'd put money that that ran up, hit the pivot line first. It's a long-legged doji candle, so we don't know if the low happened first or the high happened first. But I'd put money on saying that that ran up, hit the pivot line first. There was an explosive movement to the downside. Yep, pushed it all the way down there, and then the 50 MA held strong, and then it fired it back up again, which did eventually break the pivot line. But there's too much uncertainty there, right? To trade a profitable edge, we want as many green lights as possible with as few red lights as possible, and trading through the pivot line rather than trading off of the pivot line, which is what this real strategy is not only is it we're losing one of our key critical green lights, which is the supporting confluence factor of trading off of the pivot line, but it's also putting in a major red light. And all of a sudden from there, that like this is still a winning position, but as a profitable edge, and this may even still be a profitable variant. Maybe if we looked at the exact same sample of data 1,000 times over, but by trading one of our green lights for a red light, that's a double loss. That might take our 65% strike rate, let's say for a mediocre pip snatcher kind of trader, that might bring that down to only 50 or 55 or 52%, in which case it's not worth trading. It's not profitable, and that's going to bring your overall profit factor ratio down of your whole sample of trades. So that means that you need to take a ton more trades because now you've gone your overall trade data because you'll be taking good quality trades with 65% strike rate. And then this one here might be a 52 or 55, and that brings your overall average from 65 down to like 58. That's not really what we want, down to 60. So, if you want to be a trading mentor of mine, he said, like, if you want to be a great trader, take great trades. If you want to be a mediocre trader, take mediocre trades. And I don't want you to be a mediocre trader, Chloe. We want you to be an absolute demon, trading demon. This is not a trading demon
Great.
trade. This is a pretty mediocre
Great.
trade. So yeah, the fastest way to profit is to remove lower quality trades from your books. Um, so yeah, that one there's I'll just give the X purely based on that entering way too below the pivot line. All right, we're at 11. Should we fly through a few more? Let's keep it going. There's an oil trader. Good.
Yeah.
So short
Mhm.
position. Right. Okay. Immediately we can see here. This is okay. So you made a down call, DDP, uh, uh, after price had already hit that level. And we can see that is a valid level for that one there. Yep. One, two, three. So the milkman clearly had made his delivery. Um, well and truly. And we could have even made that level a zone based on how big those wicks are by and incorporating that in the center of the page of the chart. We've got that one. If you'd drawn something right at the very, very, very bottom of that wick, that would have also included the two lows from before. So it was well and true. So I see that as a zone, and I see that that was well and truly into the zone, hit the zone, and so on. So that is like I would call that an invalid DDP. That's enough. That satisfy me to be an invalid. Some of them can be subpar. This one's just invalid. Trading beyond recent low.
Yeah, fair. That
But
makes sense. I think it's because I'm like, well, with pivot extension, this is a trend, and you'd expect that to keep going, and there's no sign of this. But what I'm now like pairing with that is like the previous interactions.
mm,
So like, say if none of this had happened, this hadn't happened, and this hadn't happened, and this was, I don't know, this was all just trending down. There was nothing all around here.
mhm.
And then we had this swing, and then we had this swing. Would you still be like, no, because we're at the recent high, or but there's no other resistance?
I'm very careful trading beyond recent lows. Reason being, if we were trading a power trend where you're entering, and we're taking the power trend like
Okay.
5 days
Profit.
earlier, where you're entering is where I'd exit. Like that's
Yeah, fair.
my exit point. Most of my trades, my exit point is recent high or recent low. So like,
That
and
makes
likewise,
sense.
if this were consider this, if this were a pip snatcher and this were the 1 hour time frame and you entered on the rejection of the 50 EMA 6 candles earlier, where would your profit target be? Pretty much right
Yeah.
where you're exited. Yeah, exactly right there. So that's where you'd
So when does fib extension come into play? Would say we got one more candle here, then would you start like, okay, now we'll use fib extension because we've passed previous lows to expect when will that run end?
yeah, you could use that. I normally use fib extension purely for profit targets with the playbook strategies,
Okay.
not so much for entries. But the pip snatcher is great because you can enter it really late run, right? So if this had broken those recent lows, like if you had one more red or bearish candle the same size as that one, that same distance further down, exactly where your cursor is, yeah, bang on. Oh, all bets are on. Let's go.
Okay.
But also, what we are probably likely to see is that when we look at the 1 hour time frame, that recent low is also now a support level, and we've got now the daily rejection or the trading into support, and the 1 hour is trading post rejection. So we can have a look at that one. Yeah, and even that we can see price rejected and then consolidated. And if you had shimmied it up, just like all it would have taken was a tiny shimmy up to this 1 pip higher, it's not it wouldn't clearly be a double bottom, but we can see I'm seeing what's going on here. Price has run down consolidated. I think we did speak a bit about this. I don't know if it was last week or if it was with somebody else, actually. I think it might have been somebody else. But you know how we got run, pullback? That's often what we see. Run, stall, run is typically how is what we see. And these are not always the things. But run, stall, pullback, that's a what would you say before? A tread cautiously or
Oh,
something.
well, watch out. Oh, watch
That's
out.
a watch out. That's a watch out. Run, stall, pullback, run, pullback. Way to go, go for it and go wild. Run, stall, run. Like we see this often in daily time frames, right? Like if we're doing our DDP, if it runs up, stalls at a level, then we get a daily pop. Great, carry on. But run, stall, pullback. Often I've started noticing somebody asked, this one of the students actually brought that to my attention. And I'm like, yeah, that's often where this is a good, big sign of a trend change is about to happen. And that's exactly what we saw here. There's a perfect example of run, stall, pullback, and then also, just the run, stall, pullback. It's not really sufficient enough, but that on a relevant level, which we've seen through the last three times the daily time frame had reached that level, it rejected away from it. That one is just one that certainly should have been avoided, I'd say.
Yeah, very fair.
And even regardless of trading two recent lows. So you position this one up nicely. How you positioned it here, perfect. That's how I'd normally position it. And you can see right there. So you didn't put your entry order right on the 50 EMA or slightly below. That was kind of what I was trying to showcase before, just using words. But yeah, targeting recent low, beautiful. Just right around the bodies of those recent lows. Entry, stop is where it needs to be. Profit targets where it needs to be. And then the entry price was just where it was to make it one-to-one. Perfect entry play set up there. But again, entering post rejection off of a significant level was the cross for that one. Right, let's do three more. Three more. This
Three more.
one's yeah.
I have a maybe 20 past the cut.
Oh yeah, okay. Let's do a quick fire round.
Okay.
It's just because that'll bring us to 15 trades analyzed, and that's a nice
Yeah, so that's good.
number. Okay, this daily is it? Uh,
Daily.
DDP short or long?
Mm-hmm.
Short. Yeah.
Short.
Deceleration, resistance, things move to the downside. Cool. No, I like that. That's a nice oscillating market. Very good. Then we had price. Okay, lower low, pull back, beautiful. Good trade. I like this one. Good. What was
Okay.
the outcome of the last trade? Sorry, of the last two trades.
The oil, what time is it? Oil was -1 and
Right,
CAD was plus 0.85.
plus 0.85. Right, because those were the two invalid ones. Right, moving on. I'm just keeping a
-1.
recording of this.
Pound USD short.
Minus 0.85. Short DDP. Yep, looks good to me.
It's a bit
A-
small.
And what you did there with your Fib retracement as well. Oh, your Fib extension, that's quite good. So you're like, cool, ran up 1.272. That's the common resistance line. And it started falling down. Yeah, that doesn't matter. You got the big bearish candle and then you had the next one. That's good. Like, even though it was a small baby candle, like it was so RSI was so overbought, it was needing to pull back. It was due a deep correction. um, hmm. The level that you're drawn in there, I would have shimmied that up to include those lows in pretty much the center of the chart. Yeah, that's where I would have put the level.
Yeah, which is that line. Oh, I remember this one. Remember messaging someone about this. It was there because it lined up on entry, and then accidentally moved it before I took my screenshots. But it
Right,
was like there because in my analysis I've got was lining up on entry.
right.
So that line should be like here
Nice
and
one.
then just out there.
Cool, cool, cool. Good stuff. Now the mental deletion, right, is this term that have been used. Yeah, bang on. Perfect. Cool. So anybody who's watching this is thinking, hang on a second, why is Luke going to give her the green seal if that's actually formed a higher low? Like you move because just a couple to the right, that higher low. If we see what happens from where the low is, the previous low, up to where her entry was, go to the entry, that was actually quite a nice smooth arc, right? With the exemption of that one big bullish green anomaly candle. So this is where we use a little bit of mental deletion. I mean, you be very careful with this, but again, this is what the algos and this is the art and the science that I was talking about at the beginning. What caused that? It was obviously some anomalous news or something announcement. What happened after that? Within two, three candles, price rocketed right back to where it would have been. Exactly. That little, yes, you're doing a great job with the cursor, by the way.
I'm trying to improve, thanks.
Good. Yeah. That was Alka's complaint last time. She's like, Luke, can you take care of the thing? And I'm like, well, then I can't be in my flow. Um, so that pulls back. That would have just pulled back nice and smoothly to the entry, and where we go. So one candle, two candles are okay. We don't want to be saying like, oh, let's just get rid of this whole chunk of data. But like what caused that weird little low, that weird little high was just one big bullish candle, which we can just delete that one and then fill in the blanks with what was really going on. So yeah, that's the one little query that folks could have had. And then also that resistance level would be slightly higher, just up where it was, pretty much bang on entry. Your entry here is see that one's sufficient. That's fine. Um, and you targeted recent low. So what I love about this is you targeted the bodies of the recent low. Again, that's where the real low was. The other one's not a lower low because the other one wasn't a high. That was just that anomalous one, bullish candle. So that's where the low is. You targeted the bodies there, not the wicks. Sometimes get confused and people target the wicks. Bodies is the optimal spot. Stop loss is placed perfectly behind R1. Your entry order price was just right where it needed to be for that to match the one-to-one. And epic. Like I'd call this an epic setup. Like, this is probably one of my favorite setups yet. So good shit. Takes across the board. You've got 3 minutes. Right, quick fire round. Let's go. Let's go. Trade number 15, the final.
Got to move months now. That's just done August.
Oh, we've finished with August, have we?
Yeah.
Oh, let's wrap that up then. Let's go. We've got your
Okay.
August performance. That's makes it really easy then. Cool. That was a 14 trades, was it? Is what you did in August?
Let me double check that.
It was. Excellent. 14 trades. All right. I'm going to do a quick little bit of
14.
math.
Yeah.
14, right? And of your, there was you got minus 5.58, right? Minus 5.58. Call that a plus one. So there's one of the trades that was a full loss you shouldn't have taken. So I'm going to add that to plus, so minus 4.8, 4.58, minus 0.38 because there was a 0.38 win, which you probably shouldn't have taken at all. Another one, 1.00. There's a full loss, which shouldn't have been taken. There was a win that was 0.85, which shouldn't have been taken. That goes, so that is a negative. And then we go, oh, 1, 2, 3. Yep. 1, 2. And then we have one more one. Yeah. So what we've got here of the trades that you did catch and of the ones, so you took a 5.58, they should have only been minus 3.81. Of course, it's not a result to be proud of. It's still a negative month. But
Plus all the ones I missed
yeah,
with my early entry. So maybe
I'm
that would have
curious
got me
about
better.
the ones, yeah, the great trades that missed using your method, or just because you weren't on the charts or whatever. And like I take 14 trades in the month and take 3.5% losses sometimes. Like it's no big deal. You can trade perfectly and still have a negative month. So it's just a small sample of data. But we can see that there was about, what was it, 2.5% that, or 2%, which you probably shouldn't have, 2% of loss that we could have avoided if we stuck to the trading plan, and an unverifiable amount at this stage. Maybe that could be an interesting thing for you to go and back test to go and see what winning trades did you lose or did you miss out on for the reasons that we discussed before by using your entry method.
Yeah.
Could be
I'm
interesting.
in the middle of it. I'm in the middle of that just now. So I'll have that
Right.
information soon.
Excellent. Well, would you be able to do that by next session? See what, or if August. I don't know if you've got time to go through all of that. I know we've only got a week before the next session. Maybe just do a little
I
exploration.
can I can focus on August. I've just got to do all the months in the last 12 months and I've hit
That's
them off in different ways. So I'll focus on August
right.
until next Wednesday.
Good stuff. Good stuff. All right, you can stop the screen share if you'd like. Guys, that was hopefully you found that helpful, useful, empowering. You can see this is the dirty work behind trading, right? This is the stuff that determines the difference between professional traders and novice traders. We're not going out there hoping and praying that we're going to have wins and losses. This is where majority of your job actually comes into effect, into refining, honing, crafting your skills. This is the, as I said, the dirty work that most traders, 99% of traders are not willing to do. So if you're here, if you're watching this and you are actively participating in this less shiny, less glamorous part of trading, you're well on your way to being within the top 1% of traders out there because you're already doing what others are not willing to do. Thank you all for showing up, and thank you so much, Chloe, for part 3, session 3 of sharing all your live journals and all that good stuff. Cheers. I'll see you all next week. See you next week. Can't wait to see what you have in store for us for session 4. Peace and love.
Thank you.
Yeah.
Bye.
Bye-bye.